The US dollar is trading back in the middle of its recent range against the Canadian dollar, having traded around these levels now for much of the last 3 or 4 months. Now at times it's looked like breaking below. In fact, for a week or so we actually did hold below the 130 level support, which we've highlighted on previous videos. But events of the start of this year have really shifted the dial somewhat here. They are now back in the middle of the range around 132. Of course, the range going from around 130 to around 133.50, 134. We're right back in the middle of that range because of the events that we've seen over the course of the last few weeks. At the start of this year, we were looking at potential events which could create a lot of volatility, particularly in the US dollar. A lot of people around the turn of the year talking down the US dollar, the prospect for other currencies to start to outperform it, given the fact that we have seen the removal of certain risks, the signing of the trade deal, for example, between the US and China being a key one of these. But few people saw the events unfolding, for example, at the start of the year in the Middle East. The flare-up in tensions between the US and Iran, this quickly did subside, given how quickly it escalated. We did see that quickly subside, though, and the risk premium removed from the likes of oil prices. The most recent of these major risk events, though, for the markets has been the spread of coronavirus across China and outside of China, with numerous cases being reported as well. The numbers that we are seeing are growing very quickly every single day, and that has weighed heavily on the wider financial markets. Of course, those with greater exposure to China, those companies with greater exposure to China, have been hit the hardest. But if we look outside of the stock markets, if we look at the currencies, if we look at the metal markets, if we look at the safe haven markets, we are seeing a lot more of a rush towards the safe havens as the stock markets have been hit at the start of the week. European stocks, US stocks getting hit by around 2% at the start of the week. We've seen some support for things like gold and other safe haven currencies. One of the areas of interest, though, has been oil. Oil has fallen 10% over the course of the last week. The reason for this is quite simple. China is one of the world's largest consumers of oil, and given the fact that we are now expecting the Chinese economy to have slowed in the first quarter result of the spread of this virus, you've got to remember this doesn't just impact the precious metals and things like this. This does have an impact on the wider economy. It affects people's shopping habits. It affects people's travelling habits. I think the Chinese Transport Department yesterday released figures that showed that travel was down almost 29% over the course of the last week. This week, of course, being a massive week in China, with it being the new year, this is going to have an impact on the economy. The degree to which that happens is still relatively unclear, because we don't know how much worse this is going to get and how long it's going to last. But previous experiences back in 2003 with the SARS virus shows that there was economic consequences, and now China is a much bigger economy. So what we've seen in oil prices, because of the economic impact, the impact that therefore has on demand for oil, is that oil has fallen around 10%. We've spoken in previous videos about the correlation between oil and the Canadian dollar, and that's why we've seen the Canadian dollar weakening somewhat over the course of the last week. That's why we've gone from around 130, threatening to break below, up into the 132 region. This has also been supported as well by the US dollar being a safe haven currency, US treasuries being a safe haven instrument. At this moment in time today, we're seeing a bit of a pairing of those safe haven moves, but this is not because we're seeing the situation improve in China. It's just simply because of the size of the moves we saw yesterday. It seems we're seeing a little bit of profit taking. So that would suggest that we could potentially see some more upside in this particular currency pair. Continued safe haven flows and continued downside you would expect for oil, assuming that this situation is destined to get worse before it gets better. Ultimately, though, the key levels remain the same. 134 to the upside, 130 to the downside, 132 acting as a little bullish bearish barometer in the middle.